capital.
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. How y'all doing on this Friday? I say, how you doing on this Friday? Yeah. Good evening, good evening, good evening. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it is not your first time tuning into Tim's Tidbits, please allow me to say welcome. But I want to add in a hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Rania Grande. That's just big spot if you don't hablo Espanol. And you are in tune to another episode of The Intraday Price Action Recap. If him. And if you was around for the little pre-roll intro commercial, if you will, this episode of the Price Action Recap is being brought to you by the Smart Money Manuscript. If you don't know what the Smart Money Manuscript is, the Smart Money Manuscript is your one-stop shop for everything that I've ever discussed on my YouTube channel dealing with investing, trading, preparing for the future, swing trading, options trading, stock trading, brokerage accounts, ICT methods, all this stuff. It's in one concise course, and the cost is $69.99. It's the first link in the description below if you'd like to, support your boy. If you have already purchased the course, will you please, if you already signed up for the course, please go on WAP and leave a review for the course. Review it, give an honest review. If you like it, go tell people how much you like it and what you're getting from it. That way they'll be like, hey, people really like this thing, and they'll show it to other people. Thank you for the feedback that I've been getting about the little glitches y'all been finding. When I tell you, when I was putting this course together, this course almost did not come out because I was getting so tired of going through creating these modules and then go back and the module would not be there. The module would not be there. It, like, the questions would be gone, the answers would be gone. And I've been having people reach out to me saying, hey, some of the answers not there. Some of the, I found the typo here. Something's not quite right. So thank you for the people reaching out to me. Hopefully we got everything on the right track now. I'm going to sit down this weekend and go through all of the quizzes and make sure all of the answers are there. Make sure there's no spelling errors. I'm gonna have to take my time because the error that was there, it was spelled right, but it was the wrong word. So I'm gonna take my time and go through it, fine tooth comb it. Anyway, appreciate the support. If Price did anything today that caught you off guard, there's a link pinned to the top of the chat on YouTube. That link brings you over here to the Zoom where the Zoom thinks I'm raising my hand because I keep doing like this. So it sees that and it thinks I'm raising my hand. But it brings you into the Zoom where you can unmute and say, hey, Tim, I got a question. Something keep popping up on my phone. What is that popping up on my phone? I got a question. And you can unmute. You can ask your questions. Sometimes I look at the chat, sometimes I don't. The best way to get your question or your participation recognized is by joining the Zoom and just unmuting and talking. Right. I never see the Zoom chat until the end. So if you put something in the Zoom chat, I don't see that until the very end. In the YouTube chat, every now and then I'll glance over there and I'll see it. But like I say, click on the link that's pinned to the top of the chat and pull up with us. Now, with that out of the way, right, let's go ahead and share my screen. Wait, before I share my screen, who we got up in here? I see we got Yolanda up in here. What's going on, Yolanda? I see we got Jim up in here. I'm the biggest bird. What's up, Jim? We got Lump up in here with Tony Two Pistols. We got Marco up in here. Yesterday, Marco wasn't on mute. Marco was like, hey, baby. I guess his sweetie walked in the house. He wasn't on mute. Oh, Marco. We're going to start calling Marco Romeo. That's what we're going to call him. Oh, Casanova. We got Here to Learn and Share over there in Tube Land. We got Kim over there in Tube Land. Here to Learn and Share. I don't know what Here to Learn and Share and Kim be having going on, because I always see Here to Learn and Share comment first, and it says she's number 2. And I see Kim's comment second, and it says she's number 1. So I don't understand how this top fan thing be working. Right? Hola, Valentine. What's going on? Even Better Me. What's going on, Even Better Me? How you doing there? My watch just told me I met my stand goal. I'm sitting down. I don't know why I thought I was getting up. Okay, them all the names that I see, that's all I'm gonna shout out. It's Friday. I ain't gonna hold y'all up forever today, man. We're gonna go ahead and get into it. Here, Learn and Share. Pissed. She say crazy. I wish I knew how it worked, because I be working hard trying to be first up in here. And they keep saying I'm number 2. I ain't number 2 to nobody. I'm number 1. If you ain't first, you last. That's what Ricky Bobby Daddy told him. If you ain't first, you last. Who know it? Who knew it or know a movie that is? I got that from. If you ain't first, you last. Hmm? What movie that come from? Somebody sent me a message on Discord over there in the Discordia.
That's from the when them boys be doing the shake and bake.
Shaking back, shake and bake. Magic Man. Now you see me, now you don't. Yeah, that is pretty good. That is pretty doing the shake and bake. uh I got a message in the Discord. They said Timotheus. All right. They said Timotheus. I'm disappointed. This series is discontinued. You were dropping gems. Every time I took a trade, the level would be right, but price would go the opposite direction. So many aha moments between this and the manuscript. Thanks. All right. With the light bulb. I appreciate I am very thankful that you found value in the minor Timmy Rogers. I'm very thankful that let me go full screen and say this. I'm very thankful you found value in the minor Timmy Rogers. I'm very thankful that you found value in the Smart Money Manuscript. Link in the description below for $69.99 for anybody who want to pull up on it. Right. And I was trying to offer something for those that have been with me for a while and of a certain tier, like the diamond members in the Discord or the mentee members on YouTube. Those are the highest tiers for the paid portions of what I offer. Right. And I was trying to give them, just a little bit extra, but nobody was pulling up for it. So it's like, I know y'all hear me say all I need is one. And that's true when we're in the teaching phase. When we're teaching and trying to get this thing off the ground, right? All I need is one. I don't need a room full of people. I just need one person to listen to me. If I can make a difference in that one person's life, I done did my job. All right. But when it comes to the point to what do I say? Where are we now? Right? We sprinting, right? When it comes to the point where we're sprinting, you have to show up. You have to show up. I can't I can't want it more than you. I can't want it more than you. And the amount of participation that I was getting for the mind of little Timmy Rogers was next to none. Right? 4 and 5 views per video. Right? Mind you, now I'm taking my time before I take my son to school, sit down in front of the charts and share my thoughts with the series was hidden. The videos did not pop up for us to watch for some reason. Let's go over here to the diamond chat. Let's go over here to the tube. Let's go over here to the tube. Your channel. All right. Post. All right. Now, let's go over here to the diamond chat here. Might have I got that there. All right. Now let me share my screen. All right. If we look here, inside the diamond chat, right? If we look here inside the diamond chat, we can let me see, when did it start? I don't know when it started, but if you look here, it says right here. All right here on 7/27. Good evening, everyone. I've decided to share my thoughts with the Diamond Discord and Mentee YouTube members via a new playlist called Inside the Mind of Lil Timmy Rogers. I don't know how long I will do this or how often, but here we go, right? And it's got the link. If you click that, it takes you right there to the replay, right? The Mind of Lil Timmy Rogers. All right. Takes you right there. And then if we scroll down, right? That was the playlist. Then right here say, hey, I dropped part 7, right? Because initially when I did it, it probably had like 6 parts inside there or whatever, right? I dropped part 7. Okay. Then come down here. It says, hey everyone, I dropped part 8. Then you come right here, it says, hey everyone, I dropped part 9. Right. Letting everybody know when I was dropping. Over here on the YouTube side, right? Good morning, everyone. Part 9 is up. With the link there. All right. Hey, everybody, I dropped part 8. The link there. All right. That's when, hey, everyone, I dropped part 7. Drop part 6. All these right here. All those there. Drop. I drop. Hey, everyone, I decided to, right? When I said I decided to do this right here, right? There, I decided to make this here. So got all the notifications. I'm sending out the notifications like, hey, I dropped this. Hey, I dropped this. Hey, I dropped this. But the yeah, it's not is it because it's unlisted. Yeah, it's unlisted. It's not for the public. It was for certain tiers. It wasn't public video. Right. But this right here, the notifications over here in YouTube, that was for the members that pay through YouTube. Then the notifications inside the Discord is for the members that pay through the Discord. So, but there are 23 Diamond members. There's 23 Diamond members. And the last video before I made the video public, when I talked about the series being canceled, 3 views. 3 views. There's 23 Diamond members, and I can't remember how many mentees are over on the YouTube side. All right. Can't remember how many mentees are over there. But 3 views on the last video before I made it public. And then who remember what the view count was mad low, right? Mad low. So that's why the series got canceled. For those who was getting a lot out of it, I apologize for having to cancel the series. But due to lack of participation, due to lack of viewership, the network has decided not to renew the Mind of Timmy Rogers for another season. So again, jalapas to those that was actively participating. But that's the way love. Michelle Tucker, what's going on, Michelle? I see Michelle in the chat. I see Deborah in the chat. I see Miss V done pulled up. I see Jada done pulled up. Word on the street, Jada got a $5,000 plaque somewhere. That's what the word on the street is. I just heard something moving over there. I don't know what that was. I just heard something moving over there. Word on the street, Jada got a $5,000 plaque. Hey.
I gotta dig it up from somewhere.
How much? Hey, how much you think you get for that $5,000 plaque at the pawn shop, Jada? Hey, I got a question for you, Jada. Right. Feel free to not answer if you want to, right? But based off of courses that you've paid for.
Oh yes, right? I'm just changing the baby. Yes, go ahead.
Based off of, don't be putting that baby business out there. We couldn't see that. Based off of courses that you've paid for, I don't know how many courses you've paid for. All right. Based off the courses you've paid for versus the stuff that Michael teaches, what do you find more useful and like true to how price actually moves?
Obviously, the free 99 ICT videos.
She said, obviously. So if it was obvious, I would be asking. It's obvious to me because that's my opinion, but I'm just asking, like, I'm just trying to see if it was only me because I always, because I like what I like and I don't care what other people think, but I just want to, find out from somebody else who's, paid decent money for courses. And when you compare it to something that, I'm saying, someone put on Al Gore's internet for free, right? How does the paid stuff stack up against it? And for me, I can honestly say that the paid stuff doesn't add up to a hill of beans. You know what I'm saying? I'm like Paul, I count them all as dung when it comes to the teachers of ICT. Rhonda Green done put up in here. Hey, that's enough running my mouth. I think I done separated the wheat from the tare by now. We got the True Blue gang in the building now. All the looky-loos have fallen off to the weight. Is it the wayside? Yeah. All the looky-loos have fallen off. So let's turn our attention to the Charty Tart over here. Right over there. Oh, who was on the live stream today? Diamond members. Who was on the live stream this morning? If you was on the live stream this morning, let me know that you was here. I have a question for you. Who was on the live stream this morning? Nobody?
I was on it.
Okay. Jim was on there. Jim, Mo Jim, Banana, Nana, Fo Fem, Fee Fa, Fo Vim, Jim. All right. I heard some go drip, so I'm assuming somebody trying to type in the chat, but I don't see that. I saw most of it, and it was a good one. All right, Venus. Appreciate that. Do you
I was on.
Okay. Do y'all remember what I said about when I look for and anticipate a TGIF? Do you remember the 21st of September?
I believe you said you anticipated when it's reached its weekly objective already.
Yes. When the weekly objective has been met, then I start looking for a possible TGIF, right? And if we look over on our screen, ding, ding, right? We can see that price delivered a TGIF beautifully and then ended the 4 o'clock session pretty much right where we started, right near where, because this is our current new day opening gap. It's a bullish new day opening gap. So the opening price of the day is at the top of that rectangle right there. And this is where we closed the 4 o'clock session right there. Right. So you can see we ended the day right back where we started from, right there where we started from. Then we just kind of hung out there. So, right. I said all that to say, right, if you understand the power of 3 and you understand time and price, when your weekly objective has been delivered, right? Should you on a Friday be anticipating price, in this case, to continue to rally? Right? Would you be looking for a reason to buy here or even a reason to buy here to continue to rally? That's the question. I see somebody put
Yes.
no in the chat. I see another person put no in the chat. I heard somebody say, yeah.
You said if it hasn't reached its weekly objective?
I said, if price has reached its weekly objective, should you be looking for reasons to buy so that to continue rallying?
No.
And why not? I talked about it this morning on the live stream. Why not? Not just objective met. It's not just objective met. Right? It's not just objective met. I talked about it on the live stream, and it was my reason why. That's when not wearing a premium, not wait to see what it wants. All right, those are all good answers, but I talked about it on the live stream today, and I mentioned that it's the reason why this is when I look for the TGIF. I remember I started it out. If you understand the power of 3, right? So think about the power of 3.
So
right?
It's on a weekly objective. It's basically like you said, hit that top, so to speak, wick, and we're looking for a retrace back to end the week for the
Let's
power
go.
3.
Let's go. Let's go. I got to get my sounds up. That right there deserves see, we sprinting right now, man. Come on, man. Am I sharing my sound? Can y'all hear that? Am I sharing my sound?
Yes, we heard it.
Okay.
Yes.
All right. I was about to go check it. All right, man. So, and price is fractal, time is fractal, everything is fractal. So when you think about the power of 3, right? What is it? Accumulation, manipulation, and distribution, right? What happens when you accumulate? You're building liquidity. What happens when you manipulate, right? You're eliminating, tricking, not eliminating, neutralizing, right? You're neutralizing people and you're taking their stops, you're manipulating, and then during distribution, right? In the distribution phase, you are offsetting your long or short positions. So where are you offsetting in the case of a buy program? You're offsetting these positions above old highs, right? That's where you're offsetting above old highs. What does that mean? You're distributing, you know what I'm saying, these positions. It's like, so when you get your, right, this is our week. You get our accumulation, we get our manipulation, and then when we go above this high over here, that's when we start to, that's our distribution. And when we go above this high, right, and we start distributing those positions, right, we anticipate to see that retracement. Okay. So understanding time, right? It's Friday. Understanding the power of three. We're in the distribution leg, right? We're in the distribution phase, accumulation, manipulation. Because we talked about this. We talked about this for me when I chopped off all the stuff over here. And I said, hey, this looks like a weekly, a bullish power of 3 week because of what price is doing, right? We talked about all of that. Now we come up here and when we get above this high, right, we're anticipating a retracement back because it's about to complete the weekly candle. It's about to complete this power of 3. It's about to complete something. So we're anticipating a retracement back. We're not anticipating at this moment, at this time, right, a retrace, a rally, a retrace, a rally, a retrace. Why? Because price spooled all the way up to the destination right there and completed this market maker buy model, unrestricted. Market maker buy model done, right? Once we reached our weekly objective, how do we know that's the weekly objective? Based off what the algorithm showed us back here. Remember, we talked about it. We opened the week here, right? We engage the weekly low first. We swept a higher structure liquidity along with our weekly low, and then we quickly reversed, got a bullish break in market structure. Once we got that bullish break in market structure after engaging the prior week's low first in the midst of a buy program, now we're looking at the prior week's high, right? So this is the dealing range that we're working in. We engaged the low first. Now we're anticipating going to the high. So that's why we say, hey, that's the target for this week. That's the finish for this week based off of what price is doing right now. Is it like that every week? Is the weekly high the target every week? No. Is the weekly low the target every week? No. But at this dispensation in time, that's the target right there. Remember what we said before. We said we have engineered, we have made enough structure for there to be a weekly high in place so that we can take out a higher time frame high, like a weekly high, and still leave that high intact, the one that we're waiting to see if that right there is our smart money reversal, because we still haven't gotten the actual breaking structure on the higher time frame yet. We're just letting everything build itself out. These are the little signatures that we're watching as price goes along. Okay, so because of all of that narrative, that's why this was the weekly target. And then once we meet that weekly target, we met the weekly target here during the news, right? The news is what it used, the news to go ahead and manipulate, and then take it out, right? So during that news time, we met the weekly target. So now going into Friday morning, right? Going into Friday morning New York session, we have just met the weekly target. So because we've met the weekly target, which happens to be a weekly high, now we run our Fibonacci tool, right? from this low up to that high right there. And that gives us our TGIF there. 20% was the news low, and 30% was back down here at a 15-minute inversion fair value gap right there that we had talked about yesterday, I think. Right. And then we also had an hourly inversion fair value gap right here. And then not only did we have an hourly inversion fair value gap there, there was something else down here that I'll show that's on the lower time frames, but I didn't point that out on the live stream, but that's something that I annotated when I was moving into my own trading after we got off the live stream. Okay. So that's why we were looking for, we wasn't looking for a price to keep rallying. We wasn't looking for a price to shoot up here and give us all-time highs, right? Because understand the power of three, right? We've come up here to our weekly objective, and now we're looking for some measure of retracement to end the week. And what type of tools do we have to give us something to look for? We have what Michael calls the TGIF, right? So it gives us something to shoot for, 20 to 30% off of the high of the week, right? 20% delivered with no problem, 30% delivered with no problem. We went down here and swept out some regular trading hours liquidity, which we will see in a second. I'll show that. And then we retrace back up into the range and close the day right there where we started from. And we are still in the middle of the road. We still in the middle of the road. We still in the middle of the road. We still have not gone anywhere on the weekly time frame. So on this weekly time frame, do we have any more clarity as to what price is going to do right now on this weekly time frame? Do we have any more clarity on what price wants to do? No, we do not. Thank you, Kim. Kim said no, because we don't. Because where are we? Once we took out this all-time high over here on back in June, the end of June, going into July, we have just been trading inside this box right here, right? We've just been trading in this box right here. And if we just go body to body, right? If we go body to body here, right, we're up in the premium. If we go wick to wick, again, we're up in the premium, right? We're in the premium of this area. So when we started out, we were working the discount of the area. We didn't know it was the discount because we hadn't made that high yet, right? And then now that we've made that high, right, we're up here working the premium, okay? So what I used to fall victim to a long time ago, and Michael mentioned this in one of his videos. I can't remember which video it was. When I would see a bunch of wicks like this right here, I will automatically say, oh, price just revving up to get ready to blast off. That's what I used to say. Man, look at all these wicks. It's revving up to get ready to blast off. And that ain't got nothing to do with nothing. It's all about understanding what price is telling you, right? It's all about time and price. What is price telling you, right? All it is doing is just still engineering liquidity. That's all it's doing. So these wicks, looking at these wicks, oh, it's revving up. It's getting ready to take off. Or if be wicks on the top, oh, it's revving up to drop down. Them wicks ain't got nothing to do with revving up, right? It's all about, reading the price. Reading the signatures that it's leaving behind. All right. Now, let's look at, we opened up. These are daily candles here. All right. As you can see, right, today we came up here, traded up into that inversion fair value gap that we had talked about over here. Remember, we said we traded up, touched that high probability inversion fair value gap. Then we dropped down, took out that sell side right there, just kissed that sell side. We didn't trade all the way through, but we just kissed that sell side, then rejected it. Then we said, since we rejected that low, right, the reasonable target was that high right there. Okay, we've taken that high, right? And I shared this in the Discord, right? I shared this in the Discord. And for those that may be new to the Discord or haven't been around for a while, whenever you see me share something and it's got the little man doing like this right here, that means just stay quiet and do the work. That means don't listen to the noise. That means you seeing it like you think you seeing it. Just keep practicing and you about to be a beast, right? And as you see here, when we took that high out there, this is like during the this is during the news time. And I see that when we took that high, I took that screenshot with the little man like this right here. Right. And I shared it inside the Discord. I didn't share it publicly. I didn't share it with, all of the haters. I didn't try to poke the bear. But the reason why I did that right there is because when price, right? When we looked at price and price was right here, when price was right here, what did we say price? What did we say was the reasonable draw on liquidity? When price was right there, what did we say the reasonable draw on liquidity was? And we said it doesn't have to get there, but we want to monitor how price reacts to the bullish and bearish PD arrays that's above price going back up to there. And depending on how price reacts to it, lets you know if the algorithm is going to really reach into that based off of this power of 3. Right? Yes. Above a prior week's high. Very good. We said when price was here, we said that was the reasonable draw. So as soon as it poked through there, right, that's when I sent that to the gang. Because every now and then, a hater will pop up and be like, hey, won't you show your P&L? Hey, won't you show your track record? If this stuff is so good, won't you show this? Hey, won't you show that? None of that matters. The only thing that matters is, are you internalizing this so that it makes sense to you and then executing and sticking to your trading strategy and risk management? It's the only thing that matters. All of that foolishness on Al Gore's internet, show your P&L, show this, right? I'm not showing you anything. And you want to know why? Let me share a story with y'all. I went to an event. Mark Monroe from the Come Up series, he came to Atlanta with a young guy named Lawrence. Lawrence stays in Atlanta. I don't know Lawrence. I only met him that night when I went to Atlanta. That was the first time I ever met Lawrence. Last time I ever met him, I ever saw him. All right. But Mark was flying down. He said, hey, Tim, I'm going to be in Atlanta. If you can come through, I'd like to see you. I said, all right, I'll pull up. Right. And so I pulled up. I get there, I'm chilling. They already started the show. So I come in, I sit down. You know what I'm saying? I just sit down off in the cut, chilling, and I get a text from Kiki. I look at my phone and it said, is that you over there? So I look around and she's sitting in the back, she waving, like, what's up? And then I see Larry over there. A few people that I know. I see Coach Larry over there. I saw Charles when I was coming in. A lot of people call him Uncle Charles, but me and Charles around the same. He's only a couple years older than me. I think he said, Tim, don't be calling me no Uncle Charles. We peers, right? So I seen Charles. Oh, I talked to Charles when I first came in. So it's a couple people that I know, right? But it was a lot of people in there who was approaching me that I didn't know from a can of paint. And they knew me because of this. They knew me because I sit in front of this camera in my house, talk on this microphone right here, and share my thoughts on this price action. Knew exactly who I was. Walking up to me, calling me by name, you know what I'm saying? And I'm standing there with that awkward smile on my face, like waiting for them to tell me their name. You know what I'm saying? Because they walk up and, just start talking to me because they know my face. They know who I am. Right? But I don't know you from a can of paint. But when you tell me your YouTube name, I know exactly who you are. And most people don't go by their YouTube name. I'm like one of the few people, you know what I'm saying? There's few of us out there that put our name on YouTube. You know what I'm saying? Tim Rogers, that's me. But most of us, you know what I'm saying? We might be here to learn and share. We might be even better me. We might be sturdy AF. You know what I'm saying? We might be prosperity. We might be, you know what I'm saying, Valentine. You look at Valentine and think that's a real name. That ain't even no real name. You know what I'm saying? So, and a person walked up on me, Deborah Speller, that's me. Nobody care. But a person walked up on me and it's like she came and she just stood in front of me and was just looking at me like, just like this, like, and I was like, hey, how you doing? Got my hand out there. She looked at my hand, then looked back up at me. Everybody know what this means. So I stepped back, like, bust a move. Like, I stepped back a little bit. I'm like, and then, so now I'm trying to give her 5 feet. You know what I'm saying? Because I don't know you. You done walked up on me. I don't know if I offended you. You know what I'm saying? And then after a while, like 2 minutes, right? Then she started laughing and told me who she was. And I was like, man, you better stop playing with me like that, man. I'm from Fort Lauderdale, Florida. I had to got straight paranoid. I went into defense mode because I don't know. I love y'all to death, but I can't tell you who you are on the street. Y'all see me every day. So if you see me, I'm at a disadvantage. And if I run around here showing you my P&L, showing you my broker statements, showing you my wins, my losses, and what I'm making, now when I'm riding through the city and somebody be like, hey, there go that cat. That's that dude from Tim's Tidbit. Oh, he got that money on. Now me and my family bust in the head because somebody think I'm riding around with a lot of money because they see my P&L. So that's why I say I don't care if people think I can't trade or not. That's not why I'm here. I'm here to share my thoughts and my understanding of the ICT concepts. And I hope I do a good job at it. Now, y'all know why I be just going off and just be talking loud and sporadic like that. Shock factor. I be trying to startle people like Deborah. Sherwin from the hood, so I'll be trying to make Sherwin grab the strap. I put it on full screen. And do something like and Sherwin grab the strap. I kill me. Hey, let me drink some water and we're going to get back to the price action. We're going to run through the price action and then we're going to call it a day. Now, as you see, while I sip on this water, as you see, we talked about on the thing that I said, hey, I give y'all that gem for when I look for the TGIF for free. You're welcome. Right. And as we see, we got a TGIF and price close right there in between 20 to 30%. Right. And you're just like anything. Right. What was I talking about when I ran these here? I said the 20% is at a data low. Right. Data low don't really make it significant, but this is a time when the market was manipulated. Right. So this, and it's just easy for me to identify that's the 830 low. That's the low from the 830 news. That's why I said the data low. Right. So this is a time when the market was manipulated and it lines up with that 20%. Right. There was a 15-minute high probability inversion fair value gap that lines up with the 30%. Right. So weekly range delivered, right? 20 to 30% lines up with algorithmic reasoning. Don't just look for it because it's a pattern. Look for it because it makes sense algorithmically. Somebody said Tim called it to the T today. Thank you. I appreciate that. I appreciate that. Now, we started out the week here. Okay. Let's look at daily charts. We're going to go down, break it down as we go through time. I don't think I need that. If I need it, then I'll just redraw it. Okay, so we start the week out here. This is where we start the week there. All right, we opened up. We got Monday and Tuesday trading inside here because it was a holiday on Monday, right? But we traded up, dropped down, manipulated out the low. As we said before, Wednesday was an inside day, right? Thursday, we got a nice expansion. Okay. And then Friday, we delivered back to the high probability inversion fair value gap that we had touched here on last Thursday, right? Delivered there. And then we came back down and traded back into Wednesday's trading, eliminating the possibility of creating a BISI. Right. So we remove the possibility of creating a BISI. Now, in a bullish scenario, this right here, we'll be looking for this to be an immediate rebalance. And the next day, I like to say the next day or the next candle, but the next day at the most 2 candles over, we get gone and engage the liquidity. Okay. Now, in the case of we're up here engineering liquidity and we're trying to see if we're preparing for this bearish season, now we're looking at this as, hey, is this a sign that the algorithm does not want to show any displacement to the upside by not creating an imbalance as we're moving up into this high, right? Those are the two mindsets you want to have while we're here, right? Tim, you always looking at both sides. Won't you just call it one way? I want to know both sides of the story. You know why? I'm not a bull. I'm not a bear. I'm a beast. Let me move my microphone so you can see it clear. I'm not a bull. I'm not a bear. I'm a beast. I buy them. I sell them. I got options, right? So I want to know what the algorithm is doing up and I want to know what it's doing down. I'm looking at signatures, right? Even if we're in a buy program, right? I'm looking if the algorithm gives me an opportunity to sell inside of a buy program, I'm going to do that. Why? Because I'm a day trader, right? When you're in, if you're in a buy program, every day is not going to be a up day. There's going to be down days, right? And even in the midst of a up day, there is opportunities to sell, right? I'm not saying that everybody has to go trade against the grain, but the times when I'm sitting in front of the chart, it may not be a time to buy. When I sit down in front of the chart, it may be in a discount. If I sit down in front of the chart, it might be in a premium. When I sit down in front of a chart, it might be at equilibrium, right? It can be anywhere, right? But when the time meets price, I have to be able to decipher what is the algorithm telling me and decide, do I want to engage? I like that discretion. I don't want anything mechanical where I'm pigeonholed into this one thing where I can only execute if this one thing happens that doesn't fit my trader identity. Okay. So now, let's just drop down to 60 minutes. All right. Dropping down to 60 minutes. We opened up the week here, like we said before, right? We traded up, kissed, institutional order flow entry drill on this 9 a.m. SIBI from Friday. We dropped down, took out the sell side liquidity, traded back up into this 10 p.m. SIBI from Sunday, consolidated there at the new week opening gap, right around that opening price, right? The opening price from this week and the closing price from Friday, right? Hovering around there. Then we dropped down, took out the weekly low, right? Continued down without any type of retracement back into that weekly low. Came down, took out that sell side that we spoke about over there, traded back up into that 6 a.m. SIBI from Tuesday, dropped back down, but did not make a new low, right? Huge manipulation right there, unnecessary drop. Then we took off, traded back up to that prior week's low, and started to engineer some more liquidity. Took off back to the new day opening gap, trading above that buy side right there, right? Traded back down into this 4 a.m. BISI, right back at the prior week's low again, ratted up, took out that buy side liquidity there, traded back down, manipulated out that sell side, right? What price engine model is this right here, right? When we accumulate, take out the low, and then go up, right? That's that offset accumulation right there. This signature right here, that's the wig snatcher, right? When we go the direction we want to go, come down, right, and go back up. So we got the wig snatcher in the midst of this offset accumulation right there. Okay. We look at the whole area, right? The whole area of accumulation right here. This is reaccumulation, consolidate, expand, retrace to a discount, and go up. Come on, Smart Money Manuscript. Where you at, man? Where you at, Smart Money Manuscript? Let's go over here to, what is it? Order flow. Is it order flow? Looking at. Let me see if it's order flow. Offset accumulation. Accumulate sell side liquidity by repricing under an old low. Sell stops will be triggered and offset current long positions and or inducing sellers at discounted pricing. Price will seek higher short-term premium arrays to offset positions, right? Formation of a Judas swing, sharp move in a specific direction that looks like a genuine breakout, trigger stop loss orders, and attract new traders who believe they are entering a legitimate trend. Market sharply reverses in the direction of the true directional move, right? Offset accumulation, reaccumulation, reaccumulate fair value and retracement lower at a discounted rate. Week long holders will be squeezed in the retracement lower. This allows smart money to reaccumulate new long entries or induce more sellers at discount pricing. It looks like an expansion followed by a retracement, right? Reaccumulation, right? We consolidate, we expand, we retrace, right? The week longs, right? The ones that got in on this breakout right here, we traded up there. As we come back down, they getting taken out, and it's inducing more short sellers here, right? And it's coming back down to a discount PD array, right? Expand, retrace, back down to that bullish order block right there, right? Reaccumulate fair value and a retracement lower at a discount PD rate, right? Week longs, right? Expansion retracement, right? Reaccumulation. Okay, offset accumulation. Okay, we're accumulating here. We drop below the low right there, and then we come back up, right? Quickly turn around, take out the buy side right there, right? Sharp move in a specific direction looks like a genuine breakout. Trigger stop loss orders and track new. Y'all see it there. Y'all see everything I'm talking about. Market sharply reverses directions in the true directional move, right? Drop down, sharply reverse, and off to the races we go. All right. Come on, smart money manuscript. Link in the description below for $69.99 if you want to partake of the smart money manuscript. I thank you. All right, let's go down to a 15-minute chart. Oh yeah, once we did that, we delivered to the weekly target, right? Not only did we deliver to the weekly target, we traded up. We was looking up here today, looking for, okay, we've come up here to a balanced price range, right? We talked about, okay, we're in a buy program. So I'm not just going to sell when we get here. I need the algorithm to show me that it doesn't want to keep going up. And then, yes, it does want to come down here and give me this TGIF, right? Y'all know how I am. I don't try to pick tops. Once you get up there, I need you to give me some type of signal rate sure that we are going back down. But if we look here, right, we traded up here to a 1 hour SIBI right here. And we traded up here to a 1 hour bearish order block right there. And for those who have eyeballs like mine and can't really see, right, let me expand it up so you can see exactly what I'm talking about here, right? This 1 minute, this 1 hour SIBI right here, right? That right there is during the London kill zone time, right? London kill zone, 1 hour SIBI, right? Then we got a bullish order block right there. So we got a SIBI order block, right? Confluence there. All right. Now, as we see, price came up, right? Institutional order flow entry drill on the SIBI, traded up just above mean threshold of the order block. Nice rejection off, closed all the way down here. Right. So on this hourly chart here, right? This rejection there on this hourly time frame, on a lower time frame, you could be looking for something to sell in here, because on a lower time frame, something has started to set up. I'm pretty sure, right? I'm going to mark that out, and we're going to see if something set up there. Doesn't have to be, but we're just going to see if it did. All right, we're going to see if it did something. I'll just pick this. All right, we're going to look at that. We move lower. All right, let's go down to 15 minutes. on the 15-minute time frame. All right, starting from the week, we already saw this right here. We traded up into that SIBI. We talked about that. That was from 9:45, right? New York AM session. We dropped down, took out the sell side. We traded back up, manipulated out internal buy side, traded into that 10 o'clock SIBI. So we came in, took out internal liquidity, traded into the bearish fair value gap, trade, took out the buy side once more, dropped down into the sell side, trade back up into the imbalance, drop down into the sell side, trade back up into the imbalance, drop down into the sell side, trade back up, taking out the buy side, drop down into the sell side. After touching, making relative equal lows there, trade up into the imbalance, drop down into the sell side, trade back up into the imbalance, drop down into the sell side, leave the breakaway gap, just spool down, right? We just kept spooling down there. Once we spooled down, hung there for a minute, dropped down, made a low, came back up into the imbalance, right? Because we didn't go to that one. We didn't go to that one. We didn't go to that one. Once we came down, dropped down, made the low, took off, traded back up into the imbalance, had a very deep manipulating retracement. We talked about this yesterday. Did not take out that low. And then we came back up here and started to consolidate. What did we say was down here? Trap traders. Why? Because we had this V shape. Now, this V shape actually took two dips, more like a W. But when we ignore the manipulation right here, it's just one V-shaped recovery, right? With some manipulation thrown in there to add insult to injury. Just to say, hey, you ICT traders are not going to just do this to me. My name is Phil. Okay. Came here, right? Engineering liquidity, like we said, traded up, came down into the imbalance, right? Back to the balance price range at the prior week's low, traded up, got us our wig snatcher, took out buy side, boop, dropped down, took out sell side, a boop, came down here into this consolidation area there, took out that internal liquidity, did not take out that low, trade back up above the high. Once we go above the high, we start accumulating, get us some offset accumulated once again. We're accumulating here, drop down below the sell side here. But it's this time. This is during the New York morning again, right? This over here, this is like during the Asian sometime. This is the afternoon session. But when we get back over here at the right time, right, we get what? A wig snatcher. Go up, take out that high right here at 9:30, drop down, take out that low, right? Then we come back above that high, retrace back down into the order block, and then spool to the top side, taking out the buy side, right? Got the inversion fair value gap there. This was the first SIBI that was created coming down, right? We came above it, closed above it here. We talked about that yesterday, went up. Then when the new day opened up on Friday, right, we immediately started trading into the high, right? Started trading into the high, made our way up, just kind of hung around. When the news came out, we went up. We came up, stopped just short of because I watched it on my phone on the 1 minute chart. We came up, stopped just short of the high, right? Came down, took out the low. What is that? Our wig snatcher, direction you want to go, back down, took out the sell side. Then we rallied up, closing above the high, right? On this 15-minute time frame. Then we traded up. We finally made it up here into the order block and the SIBI. Then in the order block and SIBI, we dropped down. Here's when I said there was something that was formed inside of that hourly candle there, right? On the 15-minute time frame. It's not super apparent on the 15-minute time frame, but if you understand where you are, if you understand what you're looking for, right? Once we came up here and made this high there and started getting this retracement there, right? That we were looking for the TGIF, right? We was looking for the TGIF once we came up here and made this high. So we've come up here and we made the high and we come down, right? Overlap this whole BISI right here, but we come back up and close with a doji. Okay, so right now we're watching to see if we anticipate this to be an inversion fair value gap, but we really want to see if we create an inversion fair value gap here. That would be the telltale sign for me, right? And that's what I said on the live stream today, right? Correct me if I'm wrong. If you was there, if I didn't say that, somebody say stop the cap. But if I said that, then go ahead and be silent. All right. So we were looking forward to see if we create an inversion fair value gap here, because this BISI was created in the premium of this move. And this BISI here, the majority of it was in the discount of the move. So if the algorithm was going to use this as support, use anything for support, it was going to be the one that was the majority in the discount of the move, right? Remember that had those quadrants, that half point put the imbalance mostly below because it's a bullish fair value gap. So that's the one inverting. Again, the inversion of this is going to be the telltale sign. And plus trading below that, offering this price that gives you your change in the state of delivery. All right, we didn't mention that on the live stream, but we already know that, right? Consecutive up close candles. Once you offer that price right there, boom, that's your bearish change in the state of delivery. Okay, so looking at this right here, right, we get an indecision candle there, right? If we look at the highest high and the lowest low from that hourly time frame that we highlighted, right, this is the beginning of the hour and this is the end of the hour right there. Okay, so from the highest high to the lowest low, where did we close? We closed below equilibrium, halfway of that, right? That's a bearish signature, right? We've taken out liquidity, right? So we open up here, right? Hang out there, trade above the high into a higher time frame, well, the PD array, our premium array, and then we close lower than halfway of that, and we close below consequent encroachment of this bearish signature. So if you understand this order flow, when we close there, you could short here. You don't have to wait for anything else. Why? Because it's giving you a bearish signature off of an anticipatory reactionary point. You can short there. If that's not enough, when we get our inversion fair value gap, you can short there, right? Why? Because we've got a change in the state delivery and price. What did I say? I said when we come back here, if it's bullish, this should act as support. If not, this should cut through this like butter. If I did not say that, say stop the cap. Can you chart JD? If that's a ticker, no, I can't. I don't take ticker suggestions. All right. So we're cutting through it like butter. So what does that mean? The algorithm is not bullish right now. That's a signature of bearish order flow because we're cutting through a balanced price range like butter, right? We're cutting through it like butter, right? That's not bullish order flow, right? We're disrespecting all of these discount PD arrays, right? Come on, smart money manuscript. We already talked about this, but I ain't got to open it up no more. I ain't got to open. Yes, I am. I'm gonna open it up. I'm gonna open it up. Is it order flow? Is it order flow I'm looking for? Bearish order flow. Right. Bearish order flow. Bearish order blocks. Up close candles acting as we look at it's not bullish order flow, right? So it's not bullish order flow. So down close candles acting as support, right? That's not happening. Order bullish order blocks. Do we got anything in there that over there? Right. We're not seeing that, but these down close candles right here. Right. We went up here. We got all up close candles right here. Right. We create a down close candle right there. We trade up above it, come back down, close below it. Right. We got an indecision candle. Right. We trade up and we come down, close deep down in it right there. Right. Another down close candle there. We just trade down with it and we try to go up through it. Right. So the down close candles aren't offering support. Right. Up close candles consistently acting as resistance. Right. We got an up close candle. Right. We trade up here. Can't trade above it, come down, close below main threshold of that candle. Right. We trade up, take out the high, come down, close below main threshold of that candle. Right. Trade up again, drop down, close below or very close to main threshold of that candle. Right. Drop down below, close well below main threshold of all these candles. Right. Create an inversion fair value gap. So now the discount PD arrays are the bullish PD arrays are not supporting price. We're pushing through the bullish PD arrays. All right. Come over here. What do we create when we consolidate and then expand away? Right. The down close candles at the middle. You can look at this one, but I'm looking at the beefiest ones in the bunch. Right. Down close candles at equilibrium. That's your bullish order block. Right. This is a down close candle and a bullish order block. Right. If it was in a buy program, right, the bullish order block, expect price to return here for to find support and continue the uptrend. Right here, traders expect price to return to the zone in the future where it may find support and continue its uptrend. Right. Down close candles act as support. Right. Protected lows. All right. We come here. Right. Bullish order block, down close candles, cut right through them. Right. So that's not bullish order flow. Right. It's not bullish order flow because it's bearish order flow. All right. Not seeing bullish order flow. So, and you're anticipating what? You're anticipating a 20 to 30% retracement. All right. Since you're anticipating a 20 to 30% retracement, why is that? Because that's the standards for the TGIF once the weekly objective has been met. Right. We meet the weekly objective just before the 9:30 open, make the high, switch it to bearish order flow. So now you look for opportunity to get a 20 to 30% retracement. All right. So we're coming here. What do we say? The 20% is in line with that low right there. That low right there would give us what? A bearish break in market structure, right? That low right there is when the algorithm manipulated price to come and take out this buy side right there. So this was when it manipulated at a specific time, right? And if I drop down to a 1 minute chart, you can see what I was talking about when I said that we traded up, right? So at the 8:30, right at the 8:30 open, or the 8:30 news embargo lift right here, we opened up, traded up, stopped just short of the high, dropped down below the midnight price, right? So price opened, went up there, stopped short of the high, came down below the midnight open, right? Not only did it manipulate out the sell side, right? It came below the midnight open. If you're trying to buy, where do you want to buy? You want to buy in a discount, preferably below the open price, right? So what did the algorithm do? It manipulated out the buy side, drop down below the opening price and taking out the sell side, and then quickly rallied back above. What is that? Right? That's the wig snatcher. Direction you want to go, manipulate the sell side, go back up, retrace back down, boom, right there. All right. Retrace right back down there. And then this is another example. Remember, we just talked about this, right? What did we say this was right here? Who remember what we said this was right here? Who remember what we said that was right there? What is that? Right here.
Is
What's
that
that?
an implied fair value gap?
Implied fair value gap. Come on, man. Come on, man. That's an implied fair value gap, right? And then what happened once we got this wig snatcher? Where did price come back down to and give us the institutional order flow entry drill? It just randomly stopped right here because of buying and selling pressure. It ain't had nothing to do with this implied fair value gap right there. Come on, man. And there's no algorithm. Okay. There's no way that this guy from Fort Lauderdale, Florida, can talk about this stuff in real time and it happened if there was no algorithm. Okay. If there was no algorithm. And yes, people, we do talk about this stuff in real time. Right. So I'm not going to go all the way back through the whole week on the 1 minute. We just going to look at the day for the 1 minute, starting at the news embargo. Right. And we're looking at that hour that we marked out. As we can see, right, very, very high resistance. But when we dig into it, who remember what we said today? We said that it was high resistance. It wasn't giving a lot, but it was sticking to what? Right? We said it was sticking to what? We said it was obeying what? We said it's a lot of back and forth, a lot of overlapping candles, but it's still obeying what? Who remember what we said this morning? There's an ant in my house. Had to kill him. Y'all don't remember? Y'all don't remember what we said? When Price was up here doing all of this right here? Y'all don't remember what we said? We said it was back and forth, chop suey, but it was still obeying what?
Said it was still obeying that it had reached its weekly objective and was like slowly chopping down.
Slowly chopping down. Yes, that's right. We did say that, but we just summed it up by saying it was obeying one thing. We said it was still obeying
bearish order flow.
Bearish order flow. There you go. we said it was a lot of chopping around, right? But since we have reached our weekly objective, right, price had started obeying bearish order flow, and we were watching the lower time frame to see if we get an inversion fair value gap here and an inversion fair value gap there, because the lower time frame was obeying bearish order flow, but we expected this to become an inversion, right? Matter of fact, when we got this closure here, it was like, that's good enough on that, but this is really what we want to see become an inversion, right? And then we also was watching on the 5 minute, also looking for the inversion fair value gaps. Like we said, we created one here, we created one here, we created one there, right? And we was looking for this one, and this one here was the last one that kept playing around with us. It didn't want to give us the inversion, and then finally here it gave up the ghost, right? But we was talking about the 1 minute, and the 5 minute was still obeying bearish order flow after 9:30. The 9:30, we came up, took out the buy side, and after 9:30, we never traded back above that high, and we were still obeying bearish order flow throughout all of the chop slop, right? Through all of the chop slop, it was still obeying bearish order flow. And then if you notice, right? If you notice, price was very, very efficient. It was very efficient, right? See this right here? Came back up, traded back up there, right? All these is very efficient, right? Easing down. We got one imbalance there, right? Then we come here, trade back over this imbalance there. Now, at this point here, right over here, this is the point if you don't really understand like order blocks, if you don't understand how to look at balanced price ranges, um if you don't understand implied fair value gaps, this right here was your true opportunity to trade off of an imbalance right here. That right there. Right. And not only was it your opportunity to trade off imbalance, it was your opportunity to utilize this prior low there because it's combined with that 20% right there. And we just cut through this balanced price range, right? So we sliced through this balanced price range, created a SIBI, right, at a previous day's high. Then we traded back up into that old low, into that 20% retracement, and then delivered down to the 30% retracement right there. All right. So if you didn't get an opportunity to participate back to the 20%, that was your opportunity to participate for the 30%. Right. And then once you got to the 30%, right, you got, oh, I forgot about this right here. That was the sell side liquidity that I had marked as the draw for this drop right here. And why did I have that marked as the draw for this drop right here? Because if we go to regular trading hours, right? If we come to regular trading hours, as we see right there, that right there is your lunchtime low, which is the start of that move right there. Because we came here, we accumulated there, dropped down, swept liquidity, expanded up, retraced back down, and went, right? So that right there is the low that I had marked out as liquidity. Well, Tim, why do you have that marked out? Because Michael teaches when you going into a new New York session, right? You want to keep an eye on liquidity from that prior New York session, right? That right there is the low. That right there is the high, right? From that prior New York session, right? This is the lunch low. This is the closing high right there. So there you go. That's the liquidity that I have marked out right there. But Tim, why didn't you have that marked out right here? Because this right here was the start of that move. If this would have been the start of that move, then I would have had that marked out. Right? I would have had that marked out. But since we manipulated here and then delivered up there, that's what I was marking out as my target, because all of this right here is just trend line liquidity there, right? Like we manipulated here, then we just got short-term low, 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 just a bunch of short-term lows going up, right? That right there is the important low from that move going up right there, right? That's why I had that marked out based off the regular trading hours. And when I go back to electronic trading hours, right, it's also right same thing on this lower time frame. Now, if you look at it on a 60-minute time frame, right, Look at it on the 60-minute time frame. It don't look like nothing. It look like, boy, what you doing? It look like, boy, why are you marking that out? This is that low right there. Right there. That look like, boy, why you marking that out? Let me fatten this up and change the color so that y'all can see that when we go back down, right? That low right there. That low don't look like nothing in particular. All right. That low don't look like nothing in particular. But when you on the lower time frame, that's a significant algorithmic low. Excuse me, that's a significant algorithmic low based off of some offset accumulation. And on this time frame, what does it align with? Who can tell me what that low right there aligns with on the 60-minute time frame? 2 PD arrays, I'll take either one. That's 60-minute low right there. Well, actually, it's 3 significant things. So I'll take 3. I'll take one of them.
The double order block, I forgot what it's called when it gives it the second order block gives it power.
Yeah, the propulsion block. But yeah, order block, that's fine, right? We got a bullish order block there, right? Somebody else. What else we got there?
The breaker.
But I said somebody else, but breaker. I'll take the bullish breaker. I'll take the bullish breaker. And what's the last thing right there? Very significant, very obvious. It's just sitting right there in your face. Y'all need some help.
The middle of the candle. Oh, I can't remember shit today.
Nah, it ain't the middle of the candle. There you go. I'll give you a clue right there.
Balanced price range.
Balanced price range. There you go. Right. If you're above a balanced price range, you're anticipated to act as support. Right. You got sell side liquidity resting right there. That's a potential draw. Right. We're anticipating a 20 to 30% retracement on the week. Right. So we're not anticipating it just melting. We're just looking for it to come down, take out some level of liquidity. Right. We have a high probability inversion fair value gap here. We got sell side resting right below that fair value gap. Then now it's on the lower time frame and it's resting right on top of a balanced price range, bullish breaker, order block, right? All of that. Okay. Now, when we go back down to our lower time frames, I think we was looking at the 1 minute earlier. When we go back down to our lower time frame, right? Now, you see right there, when I made it fat, the blue line there, right? But when we come down here, now we understand that this low right here is a regular trade in our sell side liquidity pool, right? That was an important low that started that move right there, right? That's our intermediate term low that started that move. Why is that? Because we had this offset accumulation there, right? So price was here. We expanded, retraced back down into this area, right? Right, giving us that balanced price range right there. We accumulated on top of it, traded below the low, right? Traded up, then came back into the range, right? That's our offset accumulation. Sweep liquidity, span up, retrace down, and go. So that's the start of this move. That's your regular trade in our sell side because all of this trend line liquidity initiated there. So that's the low that I was anticipating price to draw into, right? And then once we came down there and reached our objective, right? Where the price came back to that high probability inversion fair value gap that we talked about, right? Because remember this is the 15-minute one, right? On the 15-minute time frame, this is the one we was talking about there because we look at it our 15-minute, right? This is our 15-minute. inversion fair value gap that we talked about. We said the 20% was at the data low, the 30% was at the high probability inversion fair value gap, right? On the 60-minute, we got one there also, right? I just got the 60-minute showing on the 60-minute. It's a little lower than the 15-minute. I got the 15-minute showing on it because if you look at the 60-minute, see our price came down. See our price came down to the low of the 60-minute, poke below it to the lows into the balanced price range. Then we look at the 15-minute, the 60-minute is down here, right? The 15-minute is a little bit higher, right? This is the one that we was talking about the most on the stream today, right? Once we reached the liquidity, price came back up into, and where is it hovering around for the rest of the day, right? What is it hovering around for the rest of the day? What's that level right there? Can y'all see what that level says? Can y'all read that? Let me help y'all out a little bit. Can y'all read that?
Yeah, yes, the 30% of the TGIF.
30% TGIF, right? So once price dropped down, touch that sell side on this 11 o'clock 15-minute candle, we traded back up into that SIBI right there. Anybody who was expecting price to keep dumping, right, and try to short this SIBI right here, truly don't understand the power of 3: time and price and order flow. Because we already said we're on Friday, the end of the week. We've delivered to the weekly objective. We're looking for that TGIF, right? We've come down, taken out this sell side liquidity, and now we've come back up to, we got these two high probability inversion fair value gaps where price is just up here engineering liquidity right now, right? Sitting here working this SIBI, right? And then notice right here what we got going on right here. You see this right here? What is this right here? Y'all see what the time is on that calendar right there? Right. Now I wasn't trading during this time, right? I wasn't trading during this time. I did my trading over here, right? I did my trading day over here, right? But we're over here chopping right here, and then right here, this opening candle right there, right? Can y'all see what time that says right there on the opening of that candle right there?
1:30, beginning of New York PM session.
Beginning of the New York PM session, right? 1:30. What happens right here on this 1:30 candle? What do we do here?
Took out that lunchtime liquidity.
Right. So we're consolidating. We drop down below that sell side. We immediately reverse, right? Come up here, there. Then we retrace back down there. And then we rally back up to the current new day opening gap right there. Offset accumulation, opportunity, back to the new day opening gap, right? What does that play into, right? When you're at a point where price has found itself in between accomplishing some type of liquidity and being in between the current new day opening gap, and it's just consolidating, right? What will a new day opening gap act as? It'll act as a magnet, right? Now we drop down here in this deep run down into this liquidity, right? What have we just created here? What did we just create here? When we traded above this buy side and then drop down below that sell side, what did we create right here?
In your dealing range,
Yes. What type of dealing range?
bearish.
So we just created a bearish dealing range right there, coming off of reaching our anticipatory reactionary point. All right. So when we come into this sell side right here and we reject it, right, a reasonable draw would be the high that sent us there, right? But if price is exceedingly bearish, you don't want to see it make it all the way back to that right there. Okay. Price comes back up and it just starts consolidating at that 30%. Right. So that right there should make your antennas go up and say we're either going to end the day here or we're going to end the day here, because I'm anticipating TGIF and I'm anticipating to close anywhere between 20 and 30% off the high of the week. And now we've come here and taken out this liquidity, dropped down, taking out that liquidity, right? So we've delivered on the week, right? We've distributed these long positions we had because the market fell. That means we distributed these long positions and took on more short positions and brought the price back down, right? Then once we went below that right there, right, we distributed these short positions and took on some long positions because the price rallied back up, right? Right. Accumulation, manipulation, distribution. Same thing. The power of three is everywhere, right? We're accumulating here. We manipulate up. We come down, distribute below an old low, right? How you know we distribute below the old low? Because we rallied off of it. Where did we rally to? Some ambiguous point. Nope. We rallied back to that 30%. Where's that 30%? Inside this high probability inversion fair value gap. All right. So now that we're back on the top of this right here, now we're using it as support, right? Once we up here, we're using it as support. We drop down, take out the lows, right? Offset accumulation again, back up here to the new week, the new day opening gap, right? Once we hit the new day opening gap, we're just sitting up there, consolidating right there at a new week opening gap, right? Finish off the day, right? Close at 4 here, the 4 o'clock closure there, right around consequent encroachment of the new day opening gap, right? Then we just kind of do around up until 5 o'clock, right? Ending the day 20 to 30% off the high. Right? Everywhere you look, you can see the algorithmic signatures if you know what to look for. Right? How do you learn to see it in real time? By going through price like this and taking detailed notes of what did it do at certain times. Right? Certain time, when time met price, what did the algorithm do? We're not just looking for patterns on the screen. We're not just looking for a 20 to 30% retracement because it's Friday. It's Friday. Do you think we're going to get a TGIF? I promise I see that in somebody's live stream every Friday when the algorithm has not given you any kind of reason to look for a TGIF. But just because Michael talked about a TGIF on Friday, you think you're going to get a TGIF every Friday. You got to understand the narrative. Order flow and price delivery. Most important thing you need to understand. That's all I got. It's 7:44. We've been on here a very long time. I apologize for keeping y'all this late on a Friday. I said I was going to keep y'all this late on this Friday, and I did anyway. Do anybody have anything for me? All right, then. All right, man. I appreciate y'all for hanging out with me. What in the world? Oh, that's a heart. I just see something floating up. Jada had hit a heart. It was like floating up. I appreciate y'all for hanging out with me. Hopefully y'all was able to learn something on this right here. Again, if you're interested in the Smart Money Manuscript, there is a link in the description. The first link in the description below is for the Smart Money Manuscript. Go ahead and support your boy. It's something in there for beginners, intermediate, and advanced. Like y'all see right now, we sprinting. And every day when we talked about something in price action, I can pull up something and show you in the Smart Money Manuscript where it's right there. I use the same thing over and over and over and over and over and over. I'm not using anything different. The same stuff I learned from ICT's 2016, 2017 mentorship. That's the same stuff I'm still using right now to this day. I ain't using nothing no different. It's the same information I learned from his 2016, 2017 mentorship. It's just listening to him do the mentorships, the 2022, 2023, 2024. He just gave a deeper understanding of how to use these concepts that he taught in the 2016, 2017 mentorship. Right? That's why with that, people always say, which ICT mentorship should I watch? Start with the core content. Look at the core content, understand the core content, then watch 22, 23, 24, and 25. Because each year he gave more and more detail on how to use the core content. Right. My favorite out of all of them is 2024. Because that's when he was going to the abyss. He was going to the abyss with the gems in 2024. But his 2022, he was just giving you one thing to focus on. 2023, he did a lot of good stuff. 2024, hey, he was in his bag. But if you don't like listening to him ramble, Smart Money Manuscript, first link in the description below, $69.99. Appreciate y'all. That's all I got. Y'all enjoy y'all weekend. Take some time away from the charts. Spend time with your families. You know what I'm saying? Do me a favor, man. When we get off this live stream, go to your kids. If your kids don't live with you, call them. If you're blessed enough to have your parents still with you, call them. Let them know that you love them, man. Let them know that you love them. And don't just say it. Don't just show it. Say it, show it, and confirm it. Right? Make sure you're speaking and communicating so that you understand how to speak in their love language, and they know how to understand how to speak in your love language, right? So that they can reciprocate the love that you're giving them, right? And then everybody can receive it because everybody's speaking in one another's love language. Ain't nobody promised tomorrow, man. Nobody. Just lost somebody who was very near and dear to me. Wasn't blood, you know what I'm saying? We weren't kin at all, but he was like a father. Ain't nobody promised tomorrow, man. Take advantage of today. Right? I just went and sat down and did lunch with my mom today. I can't do nothing for myself. Every time I'm out, where you at? Let me put in my order. Where you at? Let me put in my order. I can't do nothing for myself. I can't go to the movies by myself. I can't go to Sam's. I can't go to Jersey Mike's. I can't go nowhere. Where you at? Let me put in my order. I love it. When I sat down and had lunch with her today, right? Take advantage. I went and took out a trash the other day, yesterday, I think it was, when it took out a trash. All right. And pumped up a tie. Yeah. Took out a trash, pumped up a tie Wednesday. It was Wednesday. Pumped up a tie, took out a trash, and then today went by there and ate lunch with her. Anyway, that's all I got. Appreciate y'all for hanging out with me, man. If you got something out of this, share it with somebody. Maybe they'll get something out of it too. If you didn't get nothing out of it, I'm sorry. I'll try my best again next time. Remember, we sprinting now, man. We sprinting. I'm gonna keep on trying to get you to use that noodle, that spaghetti on the inside of your chrome dome. I'm gonna keep on forcing you to use that spaghetti, right? Because we sprinting now. All right, it's time to build our new Wakanda. All right, man. Till the next time I decide to get on Algo's internet and share my thoughts with this thing they call price. Yo, it's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you know how I believe, man. Yo, y'all be safe out in these trading streets, man. Gone.